I hope everyone is preparing a notes as well. So now let's start the session now. We one update from our side, that is we are also going to start a foundation batch, and that batch is especially for the English medium aspirant. And this batch is going to start from the 7th February 2022. In this batch you will get everything, or say in this batch you will learn everything from zero to advanced level. And by subscribing this batch you will get the mock test, ebooks, as well as the live lectures. So this is also a very convenient price. That means you only have to pay 22% of the package by applying the code by 422, and by this you will get the maximum discount. And you can also just join this batch. And this batch in this batch you will understand everything from zero to advanced level. So you can also subscribe this batch for exam point of view. So now let's start the session. So the first question is, the spot exchange rate and the forward exchange rate differ by the, and the multiple options are given there, like location of the trade, type of the trader, and type of the currency exchange, and the timing of the actual currency exchange. So this question is from the foreign exchange arithmetic, and in foreign exchange arithmetic we understand the concept of the value dates. Okay, in foreign exchange arithmetic we already understand the concept of the value dates. So value date is known as the, like I always explained in my lecture, that is value date is known as a deal date. Okay, you can also understand it is a date of the deal. Okay, so value date is known as a deal date or deal of the, or date of the deal. So in simple term, you can also understand by this. Suppose any person want to travel USA. Okay, any person who is resident person in India, and he wants to travel USA. Okay, and he has presently 1 lakh rupees. He has presently 1 lakh rupees. So he went to the bank. He just went to the bank, and said, I have a 1 lakh rupees and I need dollar with respect to that. So the date when he went to the bank, it is known as a deal date. Okay. So when he went to the bank for this purpose, suppose that this is a person who is resident person of the India, and he wants to travel USA. So presently he has a 1 lakh rupees in his bank account. So he went to the bank and said, I have a 1 lakh rupees and I need dollar with respect to this 1 lakh rupees. That means he just want to just exchange the currency here. So the date when he went to the bank, it is known as a deal date. Okay, or say deal date, or say date of the deal, or say date of the deal. So that is known as a deal date. So when the currency conversion takes place at deal date, so it is known as the cash or say ready rate. So whenever the exchange of the currency take place at deal date, it is known as a cash or ready state. Okay, so the one term that you understand here, that is a cash or ready rate. Okay, so what we understand by the cash or ready rate, whenever the exchange of the currency take place at the same date, it is known as a cash or ready rate. Okay, so you can understand that you went to the bank and at the same date you just exchange and or say exchange of the currency take place on the same date. So it is known as a cash or ready rate. Okay, fine. Whenever the exchange of the currency take place on the next working date, it is called as a TOM or say tomorrow rate. Okay, so that will known as a tomorrow date. Whenever the same date or say deal date, you can just write here deal date plus after 1 day. Okay, so whenever the exchange of the currency take place on the next day, it is known as a TOM or say tomorrow rate. After that, another term that is known as a spot rate, and whenever the exchange of the currency take place after 2 days. So after 2 days, that means deal date plus 2 days. Okay, so this is known as a spot rate. Okay, or say the method we applied, that is known as a spot rate. After that, another term that is known as a forward rate. So whenever the exchange of the currency take place, or say after a spot rate, whenever the exchange of the currency take place, that will known as a forward rate. So you can also understand by this after spot rate. Okay. So what we just understand here, so you just now many one also gave the correct answer here. So the correct answer here, that is the timing of the actual currency exchange. So the spot exchange rate and the forward exchange rate, that is differ by the timing of the actual currency exchange. So whenever the exchange of the currency take place at the same date, it is known as the cash or ready rate. Whenever the exchange of the currency take place after 1 day, or say after the 1 day of the deal date, so that is known as a tomorrow rate. Whenever the exchange of the currency take place after 2 working days, it is known as a working days. Okay, so this is the working days, this is the working days. So after the 2 working days, so this is known as a spot rate. And forward it after spot rate, all the whenever the exchange of the currency take place, it is known as a forward rate. Okay, so suppose that this person went to the bank. Suppose that this person went to the bank on the 1st March 2022. So suppose that this person went to the bank on the 1st March 2022, and the same date the exchange of the currency, which is we can also write here, that is settlement date. Suppose the same date exchange of the currency take place, and this will known as the 1 March 2022, and the same date exchange of the currency take place, it is known as a cash or ready rate. Okay. After that, suppose that this person went to the bank on the same date, that is 1 March 2022, and the exchange of the currency take place on the 2 March 2022, then it will known as a TOM rate, or say tomorrow rate. Okay, when suppose, and the date or deal date is same for the every example I am just putting here. So if the settlement of this exchange of the currency take place on the 3rd March 2022, then it will known as a spot rate. Why? Because this is a deal date, and after that 2 working days, that will known as a 3 March. Okay, so this is very important, that that is the working date. Okay, so this is known as a spot rate. And like deal date is a 1 March 2022, and after 3, or say after 3 March, whenever the exchange of the currency take place, it will known as a forward rate. Okay, so this is a basic concept behind the exchange rate. Okay, and you always have to understand with the value of the value dates, like the concept of the value dates. Okay, like you always have to understand by the example I just explained here. Okay, so the right answer, that would be the timing of the actual currency exchange. So the spot rate exchange and the forward exchange rate, that is differ by the value date, that is differ by the timing of the actual currency exchange. Okay, now understand another question, and that question is from the bank reconciliation statement. And I always explain in my lecture that whenever you have to just solve the question of the bank reconciliation statement, and if the cash book balance is given, that means you have to find out the passbook balance, or say bank statement. Okay, it is also known as a bank statement. So passbook balance is also known as a bank statement. So whenever the cash book balance is given, that means you have to find out the passbook balance, or say bank statement. Where, or if in the question, suppose that here it is given like the bank, suppose that here it is given the passbook balance, that means you have to find out the cash book balance. So in this question, if the cash book balance is given, that means you have to first write here passbook, and after that the second procedure, that means you have to just make the table like this, cash book and passbook. Okay, and just encircle passbook and passbook. Whatever you have right here, you have to just circle here. Okay, so now whatever the parameters we discussed, we just consider the values in terms of the passbook. Now just that's why we just encircle the passbook here and encircle the passbook here. So suppose that if the check is deposited but it is not credited, so this is the first circumstances, that is a check deposited but not credited. That means I already just credited in my cash book the amount, that is 3,000, but bank is not credited still. That means in the passbook statement that that transaction is reflected by the 0. And in our cash book, that means if the check is deposited, suppose that check is deposited into the bank, or suppose that I just deposited, suppose that this is my account, okay, and I deposited a check of 3000 rupees in the bank, and return from the bank, I just maintain this transactions of the 3000 rupees in my cash book balance. So it will be it will be written as a plus 3000 rupees, but bank is not credited. That means in the bank statement that will be reflected by the 0. Okay, so this is the first condition. The second condition that is written here, that a check issued, if the check issued, suppose that I issued a check to someone but it is not presented, that means if I issued the check, that means I already maintain this transaction with in my cash book balance with the minus 6000 rupees, but it is not presented at the bank. If it is not presented, that means still it is not deducted from my account. Okay, so for the first term of, for the first terms and condition, if the check is deposited but not credited, because we have to consider the parameters for the passbook balance, that's why we just encircle here. Suppose that suppose that it is here it is written cash book, that means we have to put the values in terms of the cash book. Okay, so now we have to just put the values here. If the here it is written bank OD as per the cash book, whenever you find the term that is OD or say credit, you always have to put the value with a minus term. You always have to understand. If there is nothing like given, like suppose that it is written bank as per the cash book, so you have to just put the value like 14,500. But it is written here that it is in terms of the loan, or say it is in terms of the credit. So you have to put the value with the minus term. So bank OD as per the cash book, that will be written as a minus 14,500 rupees. And for the first terms and condition, so because we have to set the parameter for the passbook, so now we have to just looking for is the passbook balance is lesser or say more. Okay, so more than the cash book balance. So if for the first and for the first terms and condition, the passbook balance is lesser than the cash book. So if it is lesser, we have to just put the value with a minus term. So we have to just write here, and by what amount, that is 3000. So just put this value with the minus 3000 rupees. For the second, we have to just looking for the value, looking for the positive and negative, or say looking for the plus and minus in terms of the passbook. Okay, so now for the second, that is check issued but not presented, that means I already deducted in my cash book balance with the minus 6000 rupees, but bank is not deducted still because it is not presented. So for this, the minus 6000 rupees is lesser than the 0. That means passbook balance is greater than the cash book balance. So that's why if it is greater, that means we have to put the plus sign here, and by what amount it is greater than? It is greater than the 6000 rupees. Okay, so if I say what will be the answer here, you have to just calculate this sum, like minus 14,000 minus 3,000 plus 6,000, so that will be equal to the minus 11,500 rupees. So if the question is it is written over OD as per the bank statement will be, so the answer would be that is 11,500 rupees. So this is how we solve the bank reconciliation statement questions in the exam. So I hope it is now clear. So whenever you find a cash book balance is given, so you have to just write here passbook or say bank statement. After that, you have to just circle here, and you have to just circle here for this table, because you have to consider the value for the minus and plus. Okay, so whatever you have to consider for the plus and minus, you will just consider in terms of the passbook, because you circle here passbook and passbook. Okay, so suppose that in the question, suppose that passbook balance is given, so you have to just write here cash book and just circle here cash book and cash book. Okay, so but because here cash book is given, that's why we just circle passbook. Okay, now understand another question that is related from the current ratio, and we have to find the current ratio here. So this question is from the ratio analysis, and I always explained in the ratio analysis, we always have to evaluate the formula by own. So like in the question it is given, we have to just evaluate the current ratio. So we all know that that is current ratio is equal to current assets and it is divided by the current liabilities. Okay. After that, we have to just categorize all the particulars, like it is from the current assets or the current liabilities. So inventories, like we all know that that is inventories are related to our stocks, and the stocks are for assets as well as the current assets. Okay. Inventories are related to our stocks and the stocks are the current assets. Trade receivables, or say account receivables, it is simply like you can understand, suppose that you provided anyone, or say you provided any organizations goods or services on credit, and you have to just receive the payment from you from your debtors. Okay, so that is known as trade receivables or say account receivables. That is also now known as a current asset. Advance tax, you can also understand, it is a prepaid expenses, and prepaid expenses are the current asset. Cash and cash equivalent is also understand by the current asset. Trade payables, that means from whom you just trade receivables, that means from whom you just take goods and services on credit, and you have to just provide the payment to that person, or say to that business, or say to that organization. So that is known your trade payables, and that will categorize in the current liabilities. Short term borrowings, or say bank OD, it is also understand by the current liabilities. After that, after categorizing all the particulars in the current assets and the current liabilities, you have to just put the values in the formula. Okay, so now I hope it is now understandable. That is the you have to first, if suppose that in the question it is given calculate the quick ratio, suppose that, so you have to just categorize all the terms in the quick ratio, quick asset and the current liabilities, because in the liability cases we just assume that we have to pay all the liabilities. That's why in the quick ratio we just put the value of the current liabilities, not the quick liabilities. Okay, so like in this question we have to just evaluate the current ratio. So we have to first categorize all the particulars in the current assets as well as the current liabilities. So inventories that related to stocks are the part of the current asset. Account receivables, current asset. Advance tax, or say prepaid expenses, current asset. Cash and cash equivalents, current asset. Account payables, current liabilities, and short term borrowings, current liabilities. Now we have to just put the values here. So just right here, that is inventories. After that, account receivables, that is also given as a 50,000 rupees. Prepaid expenses, that is given as a 4,000 rupees. Cash and cash equivalent, that is 30,000 rupees. And now it is divided by the current liabilities, that is 1 lakh and plus 4,000 rupees. Okay, now you have to just sum up these terms, that will be equal to 1 lakh for 34,000 rupees, and it is divided by the 1 lakh 4,000 rupees, and you have to just solve this and you will get the answer 1.29 is to 1. So that would be your answer for the current ratio. It is very simple if you just understand how you just categorize all the particulars in the current assets as well as the current liabilities. Okay, I hope it is clear now. One update also from our side, that is 3000 MCQs batch is just started, and you can just enroll in this MCQs batch, where you will get the 1000 questions of the PPB, 1000 questions of the AAB, and 1000 questions of the LRB. So you can also just join this batch, and in this batch you will just get the 1000 questions, or say 1000 possible questions that may come in the exam. Okay, so by the same code by422 you can just subscribe this batch also. Another question, that is from the rectification of the error, and this rectification of the error topic you understand in the trial balance chapter. So the question is, when the one error nullifies the wrong effect of another, that is known as a. Okay, so here we will understand, that is what we understand by the compensating error. So the answer will be, that is compensating error. Okay, so Suppose that as the name already suggesting that whenever the one error compensate the another error, that is known as the error of compensating. Suppose that if the expense of the company in the printing and stationery, suppose that if the expense of the company in the printing and stationery was 6,000 rupees. Okay, suppose that. And but by mistake we posted as a only we posted as a 5,000 rupees. Fine. Meantime, the purchase of the company Meantime, the purchase of the company is of 7,000 rupees, and by mistake it is posted as a 8,000 rupees. So here you just undercast with the 1,000 rupees, and here you just overcast by the 1,000 rupees. Okay, here you just undercast by the 1,000 rupees, and here you just overcast by the 1,000 rupees. That means here one error nullifies the other error. That is known as a compensating error. I hope it is clear now. So whenever the one error that compensate another error, that is known as a compensating error. Again, understand this example. So suppose that, like I explained here, suppose that if the expense of the company in the printing and stationery that was of the 6,000 rupees, and that is a correct, okay, but by mistake you just posted 5,000 rupees, that is incorrect. That means you just undercast this transaction by the 1,000 rupees. And in the meantime, suppose that the actual purchase was of 7,000 rupees, but it is posted as a 8,000 rupees. That means you overcast this transaction by the 1,000 rupees. That means here one error that nullifies the another error. That's why it is known as a compensating error. I hope it is clear now. So that's all for this session, and I hope this lecture would be very useful for you. And if you are liking our content, do not forget to hit the like button. And if you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 application, so that you can get the notifications of the live lectures as well as the notifications of the important news that is related to your exam. So you can also subscribe this Adda 247 application YouTube channel. So thanks for watching me here, and thanks for joining me here. And if you are liking our effort, please do not forget to hit the like button and share this video to your friends.